Morning, everybody. Today is Wednesday, March 11th, and we could just pop right into this economic data that's coming out. Core CPI inflation numbers here, right in line month over month, year over year. We'll see what it does. It's got to be a little uptick here now, in line. Not sure what that's going to do to the markets. Maybe a little indecision here. We have some Fed speak. I'm not sure when that's happening here. What else we have today? We got Trump is speaking today at 3:30. So this ought to be very interesting here. I don't know why they had that as an orange folder. Every time he speaks, that should be a red folder. But as far as tomorrow, unemployment claims at 7:30, and then Friday we'll cap off the week with PCE and GDP numbers, and then we have durable goods, and then I think at 9 o'clock we have JOLTS, and then you have the University of Michigan consumer sentiment number. I don't really put too much weight into those numbers, though. However, let's get into. Let's start out with the VIX. We've been starting with the VIX a lot lately. Again, if you're new to the channel, hit that subscribe button. And if you do hit that subscribe button, we are currently sitting at 99 subscribers. Who's going to be that 100th subscriber today? And then also hit that thumbs up button and like this video. Hit the word more down below, and to the descriptions, you can join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. So let's go over the VIX here. So the VIX here, you can you can put your indicators up here and your moving averages up on the VIX, just like a regular equity. So right now, we are above the 20-day moving average at $21.32, and above the 50 at $18.68, and then the 200 at $17.42. So the VIX, even though the market has been trying to push back higher these last few days, we're still not quite out of the woodworks yet. I'd like to see comfortably. I'd like to see the VIX, probably below this 20-day exponential moving average at $22.19, and the 200 exponential moving average at $18.68. Ideally, you'd like to see it down here below $17.42. That would just mean that things are just kind of, back to normal down here in this range. Stocks go, they elevate, they go up and down. But as you can see right now, we are kind of curling up. You had the big spikes here, but that big, crazy historic move with oil, hitting that 120 and then pulling back down to 80. I think that was the largest move in history, biggest swing in history, I should say. However, you can see we're above the 20-day moving average. We're above the 200 moving average also, down below here, sitting at $17.82. So, comfortably, I'd feel comfortable on the stocks being, maybe hitting that bottom. If we can get below this, I would say if we could start to lose this $21.64 and work our way down to $18.68, I would say that we'd probably be approaching the bottom. But I don't think we're quite out of the woodworks yet. Although I do like the fact that we are, pulling back though. But like I said, you can treat this like a stock. You could see that we are still above these moving averages. So there still may be some more downside on the horizon here. So let's get into the ES. Let's just go to the 15. So as you can see, we're kind of channeling here, getting a little consolidation period. If we lose this 67.61.95 level, and then this 200 exponential moving average at 67.40. I think we're going to give back this entire move from Monday and come down and hit that 67.0170, which is an open point of control level that I have here. And then if we lose that, I think we can come back down here to the 66.84.5 level, and that would touch this weekly low of from November 2025. And then if we lose that, we come back down here to the 66.39.25 level once again, which is August monthly high. You can see we hit that, we opened up there on, I believe that was Monday, and then we shot right up. So there's a good chance if we lose these levels here, you lose this big speed zone here. We could come back down here and test these levels once again, though. And then below that, 66.39.25, you have 65.81.25. That is the pre-market low from over the weekend. So hopefully that doesn't happen, and hopefully we can still maintain this support here, 67.61.95. On the upside, again, we tried to regain this January monthly low at 68.14.5. We failed it. I would say for today, based on what's happening in the market, we're consolidating here. If you get a little pop, you could possibly use this as a pop and fade into this level here. Take your short with your stop maybe just above the pre-market high, and then maybe taking it back down here to these point of control levels. And then if you really wanted to get aggressive and you think that we lose this level here, you could take it back down here to the 67.01.70 level, right? So that's something you have to be wary about right now. Still kind of consolidating right now. Looks like all the markets right now are trying to figure out the direction that they want to go. So let's take a look at the SPY. Again, if you're new to the channel, subscribe to the channel. Be that 100th subscriber here. We're sitting at 99 today. And also hit that thumbs up button and like this video. So SPY is going to be the similar chart. We have these open pointed controls here at 674.23 is your first level that's open here from the 26th, and then below that we have one from the 6th here. That level is closed out, but I left that up there because I like the way that it bounced off that level in pre-market here. But the open point of control that we have here is 669.33, and that is from Monday. So that level is still open. So there's a good chance if we do lose to 674.23, and then we come down in that gap up, or gap down rather, at 672.38, we could give back everything that we gained here on Monday at 215, and then because this becomes a speed zone when you go straight up and there's no sellers there, so you be prepared that there could be a quick, swift move downward if we lose at 674.23. So let's get over to the NASDAQ again. Subscribe to that channel, be that 100th subscriber, hit that thumbs up button and like this video. Go down, hit that more button so you can join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Losing the 20-day EMA, 20-day SMA on the NASDAQ, not a good sign here. I'm going to get rid of this. This is a gap fill that was filled. I'm going to remove that. We are sitting here at a regressional trend line here that I have from October of 2025, and that is from the high. So it's a midline here. You can see we bounced off it in pre-market so far. If we lose that, you have a point of control level that it was filled, and I left it here. But it's the same chart. They're going to be the same on pretty much all the charts here. This created a nice little speed zone here. So if you lose this 24,826.24 level today, it's quickly going to come down. It could quickly come down here to this 24,657.86. And then if you lose that level, you have this August high, 24,495. Below that, you have that open point of control at 24,403.71. That was from this week. All these charts are going to look the same, guys, because we have not broken out of any range, even though we had some good spikes and we had some decent bounce earlier this week. Just like I was showing you on the VIX, we were not out of the woodworks by any means, even though, I had some good bounce after a nasty pullback over the weekend. But like I said, we are not out of the woodworks by any means. On the NASDAQ, still below the 50-day simple moving average at 25,350.83. And then you still have, we are still a long ways from these, from the highs up here for the all-time highs at 26,670. So the pullback is not bad. However, we are still in this like little kind of consolidation pattern here. So you're going to need some news to really push it up. But this big candle here at 215 on Monday, this always concerns me when you have that big spike up like that. It becomes a speed zone on the other direction on wherever that candle is. So be prepared for that. Watch that 24,826.24 level. If you lose that, I think you quickly move lower, at least down to this gap down level, 24,657.86. And then, you know, that you could probably lose that pretty quickly as well. Come down to these August highs for your next level, 24,495. So that's it for the NASDAQ. Let's get over to the Qs, and then we can get over to Tesla, and then we can close this up. Again, if you're new to the channel, hit that subscribe button, become the 100th subscriber. Hit that thumbs up button and like this video. And then go down into the description area and join our Discord community for live trading from 9:30 a.m. Eastern time to 11 a.m. Central Eastern time as well. So we're holding a 20-day SMA here on the Qs. Not a bad sign though. It's kind of an indecision key on what's happening right now. We're gonna have to see what happens when the market opens up. It seems like we are getting some stair stepping down. Right now, I think that there's still some concerns that this war is going to drag on a little bit longer, and there's talks that oil is going to stay inflated probably a lot longer than people think. However, you know, I've been reading some things that oil being inflated is not necessarily is actually good for the equities, not necessarily good for the pocketbook if it impacts our gas prices, but I've been reading that it's actually been good. It's good for our equities, and I'm gonna have to do a little more research into it as to why. But anyways, see what happens here. We're still hanging on to this 20-day SMA, sitting at 606.70. If we lose that level, it's going to be the same thing, guys. Just like I said, you have that big speed zone right here. If you lose, I'm going to have to say, if you lose the 605.47 level, there's a good chance you come back down here to this 600.28 level. And then that point of control level to get filled at 599.76 before you can get some support right there. If you lose that, you come down to February's low to 594.76. And then below that, you have the 200-day moving average of 589.76. On the upside, if you do get some push on the upside, I would say, let's take a look at this here. This is Monday. So yeah, you're going to want to get above that 609.27 and hold strongly to get some more upside here. And then you have this 50-day moving average at 614.64 to push into. And then if you could really get some push there, then I think then you could start moving into this lower end regressional trend line that we have here. And that is from June of 2025. Then I would think that you would get a little resistance up there before you then pull back then. So, but right now we're getting some downside on the market here. So I would say that you may get some morning pull back on the overall markets here. So let's take a look at Tesla now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video here. Tesla yesterday, you know, pretty uneventful day. Again, one of those wiki type days. You know, you did start to get, you know, some good concrete action at 9 o'clock. You know, less wick action. We're looking at a 15-minute chart here. But as far as Tesla today, same thing on Tesla. All your charts should look the same. I think mostly every equity had that big push up at about 215 on Monday. And so what I'm looking at for Tesla today, Tesla possibly to pull back to this 395.75 level. If you lose that level, you do have some support levels down here. You've got the 200 sitting at 392.70. And if you lose that, we do have this open point of control sitting at 389.87, which is from Monday as well. So, you know, like I said, all of your charts should look the same based on this big spike that we had at 215 on Monday. And, you know, like I said, you know, I go over this all the time, that when you have a big one directional candle and it's a one-sided type candle, it's great for that one instant. However, it creates a speed zone for it to go the other direction if you lose certain levels. And I would say right now, one of the first level right now in Tesla is you're going to have to maintain this 399.42 level. If you lose that 399.42 level, I think you're going to come down at least test this 395.75 level, which is a 200 exponential moving average. And then if you lose that one, I think then, you know, it could be sayonara, sucker, and you come on back down here to this 389.87 at some point to fill this open point of control from Monday of this week. That being said, we are kind of like sitting here on right kind of, toying with the high from Monday as well. So we're at the upper end of the move from Monday, so you got to be careful of that. So there's a possibility, though, if you do push higher right on the open here, you can use this high from Monday as support at 401.39, excuse me, 401.59, and then push into this 20-day moving average, right? You tried to do that yesterday, and then we lost that. We lost the high later on in the afternoon, right? At about, I would say about 1 o'clock, you lost it, right? So I'm not sure what kind of news came out, but you lost your Monday's high at 1 o'clock. Tried to push above it in the afternoon, and so now it's respecting it. So right now you have to respect Monday's high as being a rejection point, right? So you can see sellers are still coming in right now. You tried to push higher right here in pre-market. Sellers stepped up. So even though it is pre-market, sellers are still stepping up and respecting Monday's high at 409.59. So that's a line in the sand on the top side there. So a good long would be possibly if you push through on the open, you come back and you hold it, and then you could go higher, push into this 408.65 level, which is a 20-day SMA. But we are in this range here. This is the 200. This is the 200-day moving average. We're stuck in between 392.70 and 408.65. So that's kind of like your range that we're in right now. So be prepared for that. For Tesla, have your levels when you're trading. So let's go over what I'm going to have for today. So today I'm not even going to mess around with Wednesday's expiration date. So, I've been explaining that now as of January 26th, Tesla now has 3 days of expiration, Monday, Wednesday, and Friday. We are, so today, I'm just find that it's better to give yourself a couple days. So these premium prices, they're going on the open. It doesn't matter what your day is of expiration. On the open, the first couple minutes, they're going to fluctuate no matter what. It's going to be very volatile until the price action starts to simmer down. However, when you buy yourself a couple extra days, it becomes less volatile versus a zero DT. Meaning, so right now I'm going to have Friday's expiration date, and I'm going to start with a 410 call, right? So it's about $10 away on the upside, and I'm going to start with a 395 put, which is about $5 away on the downside here. So this will probably open up a little lower on the premium side because we are, actually, let me just see where we closed yesterday. So we are probably right around it. So this may open up, I would say, because it's a couple days here, probably may open up right around $5, maybe in the $4 range, but we are selling off a little bit. And this is probably going to open up probably right around the 2. So I may change this after the market opens. I'll see what this premium is because as I've explained before, I like to trade premiums that are at least $3. So the price action moves in increments of 5 cents, right? Because if it moves in a penny, like you see here, it goes 239 to 240. And if I trade, and if you're trading a one lot, you make $1 per move versus if it moves from $5 to 505, you make $5. So you make it 5 times your money when you're trading a premium that's over $3, right? So as you can see, like I was saying yesterday, we were in the trade room. Yeah, it was pretty difficult. I still made my money yesterday, but this kind of price action is very difficult to trade and make money on trading options. You have to be like a sniper and have your levels. But when you have these kind of wicks, it's difficult. This, however, these are better candles. When you have a good solid move one way or the other, then your price action on your premium prices, they move in the direction that you take your trade, right? So you can see we tried to break up higher, after, I would say here, at 20 minutes after the market opened, you try to make your break once, twice, 3 times, then it failed. And then we tried to, break it on the downside here once, twice, and that was it there. Failed, came back on the upside, tried to break it there. Thought you were gonna, make a break and go up to the 20-day. Failed there again. And look at these wicks right here. This is very difficult to trade. So you have to recognize what kind of trading is happening in the first 20 minutes or so. And there's nothing wrong with taking your hands off the mouse, right? Wait till you get those good, solid price actions. So I'll show you the difference here. You see these wicks here versus the day before. The day before, you had great price action. You had good, solid candles. See the difference here? And you got the good, solid moves. Those are the candles that you can be done with your day within the first 10 minutes of trading, right? So let's pay attention to that. And let's go back and I'll show you exactly what I'm going to start with. Could change. 410 calls expiring on Friday. So I'm buying myself pretty much 3 days of trading, Wednesday, Thursday, and Friday. And I'm going to have the 495 puts. So I'm buying myself 3 days of theta, which is time decay, which means that, you know, if I get into a bad trade, I have a way to work my way. I have time to work my way out of it versus the premiums that will deplete itself very quickly on a 0 DT. So anyways, that's it for today. Again, subscribe to the channel, be that 100th subscriber, and like this video, hit that thumbs up button. Also hit the bell for future notifications on videos. And go down, hit the word more so you can open up the description, and then hit the link and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Hope to see you there. We've been getting some decent traction in there. We've been having some good trades and some good questions in there. Again, if there's other things you want me to cover, feel free to leave a comment, and I will cover other equities for you. However, I will not cover penny stocks. I only cover typically like large cap stocks, you know, stocks that have good successful earnings. Mag 7 stocks are pretty easy to cover. But anyways, if there's anything else you want me to cover, I'll be glad to do it. If I don't see you in the trading room, have a great day, and I will see everybody in the trading room, or I will see everybody tomorrow.